Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorne.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Bitcoin not zero. In fact, we're feeling nice off this CPI print. And I don't know, it's a kind of an interesting day. We've got a great episode for you. King troll of crypto Twitter, Gwart, is our guest. We talk about a whole variety of things related to blockchains, their use, tokens, their viability, their legitimacy. And of course, we'll check with our good friend Bimnet Abibi from Galaxy Trading, as always, to talk about Fed Day, big day today. Before we get to that, I need to remind you, please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. Also, last night, former President Trump hosted a meeting with major Bitcoin mining companies, and then he posted on Truth Social, his own social media network. He said, "Vote for Trump. Bitcoin mining may be our last defense against a CBDC. Biden's hatred of Bitcoin only helps China, Russia, and the radical communist left. We want all the remaining Bitcoin to be made in the USA. It will help us be energy dominant." And he linked to a Bitcoin magazine article endorsing him for president as the Bitcoin candidate. It continues to get interesting out here in politics and Bitcoin. And, the crypto industry and Bitcoin are part of this campaign increasingly. I won't belabor the point because we've been covering it now for several weeks, but, just another update. Let's get right into it. Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, Bimnet, welcome back to Galaxy Brains.
Thanks for having me.
Big day today, Fed Day, CPI Day. Tell us what happened.
So you got a pretty soft CPI print, a 0.2 month on month in core CPI. That was really good reading. You saw, some of the hotter points recently cool off a little bit. Things like insurance prices and some of the other metrics. But high level, this was a soft inflation print that came in below market expectations. And the substance of it was supportive of, continued kind of slowdown in inflation prints on a go forward basis. To caveat that, you still have, elevated core inflation, right? If you annualize and compound a 0.2 month on month, that actually takes you close to like a 2.7-ish on an annualized basis. And that's still above the 2% target. In addition, you super core inflation, which is services inflation ex shelter, came in at 0.22 month on month. And that is a very welcome sort of decline. I believe last month it was 0.42-ish. And so that was a very meaningful decline. However, the headline supercore, number is still on an annualized basis is still 4.8%. And so it's a very high number. And then with the Fed, most importantly, you got pretty meaningful information out of the summary of economic projections and the dot plot. It showed that folks were only expecting one cut in the rest of 2024 and four cuts for 2025. And the market perceived that as a little bit hawkish. Especially in the context of a soft inflation print that we got earlier this morning. And so there's a little bit for everyone. I think, the main message that Powell tried to get through in the press conference was that they're going to be data dependent. And that's what he's been saying for the past, couple of meetings now. And so, you got a bunch of information. It was more dovish than expected, particularly in the context of the CPI print that was fairly soft this morning, and you saw a pretty aggressive rate rally that sustained itself. So you're seeing 10-year yields at 430. Over a 10 basis point drop on the day. You've seen equities rally. 1.5% in the Nasdaq. 1.2% on S&P. And so, risk has liked the number. Dollar is weaker on it. I think that's an appropriate market reaction. I would just say though that there are still pockets of the economy that are doing great, and they're sticky parts of inflation, and ultimately, the question about where you can take rates up to on a or down to on a terminal basis is still up in the air. And if you look at the dot plot, the neutral rate, did go up to 2.8%, and so I think that there's more of a realization in the market and from FOMC participants that the long run neutral rate is higher than we had previously thought. And even if you do get a couple soft inflation prints, it doesn't take away from the fact that the rate that makes the economy not overheat but not contract that much is still higher than where we were thinking it was going to be years ago.
Yeah. It was. I think you're right. Something for everyone. A little bit of a mixed bag here too. With non-farm payrolls, were pretty hot right on Friday last
We're
week.
hot, yeah.
So the employment picture doesn't look like it's slowing down, really, right? And now, and then also I saw one of the other ones. You correct me on that too, or add your actual knowledge of this
Yeah, no,
subject.
I
But
mean that it's so mixed though. Like they're poor. Like
I mean,
the
owner
Powell was talking
equivalent
about
rent
it in
I
the press
saw was
conference.
pretty hot in CPI also still, right?
Yeah, no, I think it came in at point 4. And like shelter's a big part of people's expenses. And like,
Yeah.
I was in an Uber driver today and he's like, I work 6.5 days a week and I need to pay for a Queens apartment. And, I'm paying 1,500 for a 2 bedroom. And he's like, when he was in New York like a while back, he was paying like 600 a month for rent. And so the absolute level of prices is still, super high. And just because the rate of which those prices are increasing, is cooling doesn't mean that, the a lot of folks aren't in pain because of how high prices are. And incomes have certainly not kept up with the overall price increase that you've had over the past 3 years. Like, folks have not gotten a 25% raise in the past 3 years. And
Right.
so,
Right.
on average, at least. And so there's still that pain in the market, and that's why I think that the Fed can't be too aggressive or eager to call success on the kind of the soft landing, and that's why they probably shouldn't cut rates too quickly or too aggressively. And then on the looking a little bit ahead, sorry to get off track,
Yeah.
but looking a
Go ahead.
little bit ahead, you also have Trumponomics most likely coming, and as we've discussed, that's inflationary. Um, and yeah, but back to your point about the labor market, the data is just so like all over the place. So like if you look at ISM services and the employment component there, it's like below 50. It's at 47. That's contracting. Last week you had a 300K miss in JOLTS, the job openings figure. You've had some of the high frequency data points like the Indeed job data kind of show a slowdown. And ADP came in soft as well, which is the payment processor. And so when you throw in a non-farm payroll headline number that's 275, you're like, well, that's not consistent with what I've been seeing in other things. But there's also the household survey versus the employer survey and or the establishment survey, sorry, and there's a big disparity between the job figures there. And there's also, some other kind of estimates that the Bureau of Labor Statistics puts into the non-farm payroll figure. The birth death stuff in terms of new businesses and how many employees that typically generates and stuff. So there's a lot of weird nuances that make the data picture a little unclear. And the job of the Fed, and this is what Powell is saying, is to have the tools to react in the face of that uncertainty. And so if you've already cut too much, or if too much, and really the price data starts to come in hot again, that's gonna put you in a much worse position in terms of tackling inflation. And on the flip side as well, like you can really put yourself in a bind if you're the Fed. And ultimately, they care about their credibility as well. And so they don't want to repeat the same mistakes of COVID, thinking that inflation wasn't going to come back. And so they really have to kind of be certain that inflation's going away to really start the easing cycle in a meaningful manner.
Well, lots of interesting information. I saw, it seemed like Powell did say that they won't they won't hike this year. That's off the table. The dot plot shows
Yeah.
no hikes, right? But we'll check in with you. It's a
Yeah,
busy
no,
day.
I mean, yeah, I personally, I think he could be justified in hiking. There's uh, enough stuff. Like if data goes like higher, if we basically had a repeat of the first 3 months of the year in terms of the inflation data, I would say that hike should be on the table. But ultimately, like I don't think that the Fed should be giving up optionality in any direction, because you're one supply shock away. You're a couple of fiscal measures away from the government. They're doing this stuff with Fannie and Freddie, where folks might get easier access to home equity loans. There's some stuff in the works on student loan forgiveness. Long story short, I think there's a lot of politicians with an incentive to make sure that their constituents are feeling wealthier going into the poll booths, and so that's going to be stimulative, and that's inflationary. And then on top of that, you've got a potential presidential candidate that might bring on more inflationary policies. And so, I'm of the camp that you're supposed to keep optionality and not limit yourself. And so I wasn't a big fan of taking hikes off the table like that, just because uh you're meant to react to hot data, and you just want to preserve that optionality.
Yeah, and that's what they say they're going to do is react to the data. So it is actually a little contradictory. I mean, if the data comes in hot, then they very well might hike. But
Yeah.
yeah,
And the other thing to think about is sorry to keep going on this, but like there's a figure, I think we spoke about it last week, but there's $3.2 trillion flowing into the economy per quarter, just from money market fund dividends and yields on T bills, etc., and from dividends from listed companies. And so that's a lot of money and stimulus that's being provided as a function of high interest rate policy. And so there's some folks that are on the more controversial side of, kind of macroeconomic policy, that are like, these rates are actually stimulative. And if you look at like household wealth, wealth per capita in the US, like all of these things are trending higher. And the positive, rate environment hasn't really hurt stocks that much. And folks are also not inclined to sell their home or put their homes up for sale if interest rates are low. And so or interest rates are high. And so there's been an element of supply being kept off the market in housing, and therefore the prices remaining elevated or staying sticky.
yeah.
And so there's lots of kind of various elements that the Fed is trying to navigate. But main takeaway from today is you got a soft inflation print, uh, one that you don't have to look too closely at. It's just good. It's not like it's good and bad for the most part. It's good in the context of the data we've seen, in the context of what the Fed wants to see. And if we see more of those good prints, the Fed will become easier in its monetary policy.
Got it. Bim Netabibi from Galaxy Trading, as always, my friend. Thanks for coming on Galaxy Brains. Let's go now to our guest, Gwart. Gwart from the internet celebrity Gwart. Welcome to Galaxy Brains. Thanks for joining.
Yeah, thanks for having me. I'm Gwart. I'm internet celebrity is probably a bit generous, but if that's what I'm going to be referred to, I'll take it. I'm honestly just a Twitter personality. I don't know that I'm anything more than that. Podcaster as well. Everyone deserves their own
Yep.
podcast. So, but
I can get
apart from
behind
that, just a follower of the crypto space.
Yeah, Gwart, you came on the scene on Twitter, and by the way, shout out to the Gwart Show on which is part of Blockspace Media, a new crypto and Bitcoin media franchise from our friends Will Foxley, our friend of Galaxies as well, the maker of the the movie we made, The Big Empty, about our mining operation in Texas. So, Gwart, you came on the scene on Twitter with this really irreverent, satirical style of commenting on really pretty niche, like technological crypto aspects. And, I guess before we get into some of the opinions that you've espoused there, and now, of course, with many great interviews you've done on your podcast, what made you decide to create the Gwart account? And, how did that start?
Yeah, well, the profile picture is of this character from this show on HBO called Silicon Valley, which I think the character's in maybe like 3 or 4 episodes, and she doesn't say a word the entire show. So I just thought I thought it was a funny character. But anyways, I was just giving some context that there's no reason that I chose this part. It's kind of like a bit of a ridiculous looking person, and it's like I just felt like this would be good for my Twitter persona. I'd followed crypto Twitter for quite some time, but I never like really engaged much, right? Like just like purely on the sidelines. And I think like during the bear market, which is somewhat standard, I think like people start to get bored. And I think, well, actually, there's a little bit of context there, which is that during like the bull market, if you actually stop and like pay attention to how any of this stuff works, like you're just losing money, right? Like you should be max aping during the bull market and not actually trying to figure out how any of this stuff works. Well, once it all went like straight down, I started paying attention a little bit more to like I guess the mechanism design of crypto and like started trolling a bit about this, and that led into I guess the persona I have now. I think I've also kind of vocalized this before, but I always felt that there was like a lot of people who would go after what I would consider to be like very egregious scams, right? Like the like Doquans and the SBFs. Like these aren't. This was never like particularly interesting. It's like it's very flagrant, and when it's on the front page of the Wall Street Journal, it's like it's not hard to figure out these people like they don't have the best intentions of their investors. But like I never, I mean, I often felt that there wasn't there wasn't much like pushback on some maybe not people specifically, but just like ideas. Like a lot of these like first principles that people take at face value, and you're like, wait, hang on, like back up. Like this isn't a first principle. Like you just made this up, and you're basing your entire, like mechanism design ideas off this. So, yeah, like I think that provides a little context as to like, there's not a lot of like method to the madness. Is pretty much what you'd expect from my Twitter.
Yeah, I mean, you have been an excellent troll, and I think that was what made it so interesting. To your point, the trolling on sort of more niche and intellectual side of crypto technology. I mean, really things, DAOs and modularity and restaking, and I mean, and also just tokens in general. I think it was a breath of fresh air. A lot of people, I think a lot of people even thought that you were an insider at some, major VC or like big project, and because your pointed criticisms and satire were so on point. Are you a member of are you some secret big venture capitalist or something like that?
No, I have been accused many times. The like running joke is that I'm Dan Robinson from Paradigm. And then I've been accused of being a few others, but no, I'm about as just kind of like random as they come, to be honest. Just like a spectator for a long time, and yeah, that's how I kind of jumped in. So I also don't have like I would say I can I'm certainly in the camp that can say more like whatever I want, right? Like I don't have any like I don't have anything that I have to protect in what I say.
I love that. You said just a couple tweets, just recent ones, just to sort of highlight this for the audience. You tweeted a couple, I guess, yesterday. If I get a very small airdrop or no airdrop at all, I take this to mean the team does not trust my judgment to govern a protocol. And so I look inward. What could I do to present myself as a better leader? And then I reach out on LinkedIn to team members and ask for feedback. This, I guess the concept here you're really satirizing is airdrops and governance tokens in general. Before we get into all of that, I'll read some other great ones that I have screenshotted here from Gwart's past. But before we get into that, let's start with Bitcoin. What are your thoughts on Bitcoin? I have to say, I don't see you mock Bitcoin very often. Where does Bitcoin fit in your world and the crypto
Yeah,
ecosystem?
I think I've always been like quite a Bitcoin bull. So I said I didn't have any biases earlier, and I absolutely do. I'm like I would call myself a Bitcoiner. Now, I wouldn't call myself a Bitcoin maxi, but I would definitely call myself a Bitcoiner. And this was, yeah, like when I first got into crypto, 2017. Like I don't know how much sense Bitcoin made to me at the time, but within a much shorter period of time, Bitcoin made a lot of sense to me. And I would say that has I've grown increasingly confident in that position. Like more and more, I feel like I'm a Bitcoiner, right? So yeah, I mean, like the thing is Bitcoin's quite. I was gonna say simple. I don't know if that's really the right word. It's intuitive to me, right? Like the idea of a hard money is like it's quite intuitive to me. The idea of like non-sovereign store value is like this makes a lot of sense. And yeah, I mean, like a lot of the rest of this stuff, as you can tell with what I troll about, I'm less certain on in terms of like it's the long run viability or sustainability. And I think there's like a decent chance that some of it works out, but I wouldn't like put my finger on anything specifically. But like to the extent that I have like a foundational belief, like I would consider myself a Bitcoiner.
I think that makes sense. I think, especially as the X Bitcoin technology space in public blockchains becomes more and more complicated. And I don't just mean that the technology is hard to understand. I mean that like the actual functional design of these blockchains is more and more complicated, right? At first it was Ethereum's the world computer. Now it's like, well, it's not going to scale well enough to be the world computer. So we need layers attached to it so that they can help it be the world computer. But now it's like, well, actually, we're not even going to really use Ethereum as any part of the compute part of the world computer. It'll just be like a data availability layer. And there's so much movement here. Let's talk about this a little bit, the modularity sort of and layered scaling. Like, sticking with the Bitcoin side, I think one of my researchers had counted like over 50 announced or launching Bitcoin layer twos. It's sort of similar. There's dozens of them as well in the Ethereum world. A couple have real usage for sure. Does that feel like over complexity? Do you think is the future of the true general computation blockchain space going to be this interlocking web of like restaked coins powering layers that roll up to other is that utopia?
Well, okay. I'll start by saying one thing, which I think that I like to reiterate this because I think this is oftentimes lost. Like Bitcoin, maybe it wasn't like described in such like flowery language, but like Bitcoin has long been a modular stack, right? Like if you zoom out, like the intention of Bitcoin has always been we scale in layers. This was the intention of Lightning. This is why Greg Maxwell in 2014 was talking about like the inefficiency of sidechains at the time. And this is why we now see Eric and Udi pointing to how they had mentioned that if the ZK Tech got there. Actually, I'm not entirely sure that Greg Maxwell was talking precisely about that when he was talking about ZK Tech, but so I think that like this has always been the plan with Bitcoin. And if we go back, right, like we can understand why we chose Lightning as a scaling solution, right? Like state channels they're straightforward. We've now realized that like, running a Lightning node and liquidity management, this stuff has like been probably not as user friendly as we would have hoped. Now, coming up to my second point here, which is okay. So like, what have we learned elsewhere? Bitcoin has always said we're gonna pull the best tech from elsewhere, right? This is what they've always said. Okay, our roll-up's the best tech. I don't know, right? Like, and this is probably maybe one of my overarching themes I have with a lot of cryptos. Like, I don't know that we have enough like historical evidence to even suggest that like roll-ups have product market fit yet, right? Like we see people are using them on Ethereum, right? But like what are people using them for? Like these ongoing Ponzi games. And So my reservations a lot of times is not so much in like, let's not try these things. It's in, we can try these things, but let's not point at something and say, oh, like this has unlock, like this is a clear unlock, when I'm not sure that's indeed the case. So um, there seems to have been in the past like 2 or 3 years some breakthroughs in ZK tech, right? Like this is the selling point. Are like, like proving times have come down substantially, proving costs have come down substantially. Is this the solution for Bitcoin? I'm probably still on the fence. Um, I think that it's interesting to see all of this play out with like the new L2 and not just ZK rollups, by the way, but just rollups in general. I think, to me, I look at this now and I'm like, look, like, are we going to pretend like we learned nothing from Ethereum, right? Like, are we going to duplicate all of this? If we're going to duplicate all of this, like, we got to keep the Ponzi's going, right? We're going to have like continuous token printing to keep this going on. So, I mean, I'm like, that was a bit of the cynical take.
Your point is a little bit like, among others. I mean, there's a lot to dig in there, but one of the points that I think is quite interesting is that you're saying that the sort of you're saying Ponzi's, the token generation, the less like actually useful usage, has nonetheless been the activity that has helped drive the underlying technology stack development forward.
Yeah, I mean that. Yeah, I think that I don't know if you meant that like in a generous interpretation or like a less generous interpretation. I think, yeah, the way that I see it is like, so we went from like being very far on like the Lightning, we're going to scale with Lightning, right? And then there was this new Bitcoin season 2, like we're going to reintroduce expressivity, we're going to bring people back to Bitcoin. And now like maybe some of us are somewhere in the middle of like, okay, you know, you can look at all of these ETH-L2s, but like there's like a new one dropping every single week. I'm not going to sit here and say like, oh, like this is obviously an unlock, right? And like when you have these token like incentives involved, like when we can talk about that in a bit if you want, but like when you have these tokens incentive involved, like it really does distort markets. Like I find it very difficult to discern if something truly has product market fit or like any sustainability to it when 99% of the usage is to further the ongoing Ponzi games, right? And like maybe we converge on something useful at some point, maybe, but I'm just like not willing to say that yet, right? Like that's not my personal opinion yet.
Yeah, I think that's a fair point. I mean, let's expand on it though. What has been useful in crypto in your mind, from the application standpoint?
All right. Well, I'll tell you what, and this is sort of like a cliche at this point, but I think that stablecoins are undeniably useful, right? Like, and that's something that has garnered real product market fit outside of pure speculation. I think NFTs actually, not any specific NFT, and maybe not even the current iteration of NFTs. I wouldn't like, you know, say that right now either. But I think just the idea of NFTs is something that will persist. Like the idea of, Ryan Dale says this like quite well, right? Like Bitcoin is digital gold and NFTs are digital jewelry. I think it works. I also think there are people who want to identify like, like all this stuff you hear about like the future of NFTs. Like I think some of it is legitimate. And then the third thing I would say is Bitcoin as a non-sovereign store of value, right? Like those are the three things that I think have clear product market fit. Now, outside of this, um, I'm pretty unconvinced on a lot of DeFi for what it's worth. I think that when like, and this sort of goes back to the point I was saying before, when you have 99%, and I don't know if I'm being like overzealous with that or, generous, but like when you have 99% of what I consider to be people using this for the purpose of getting more tokens and selling them, it's not immediately clear that this is the making of an efficient capital market, right? So like you have some degens who are getting free tokens for locking up their coins and doing all these Ponzi games. This doesn't translate necessarily to like the broader vision of increasing capital efficiency in global markets, right? And I think that um this is like a big chasm that I still feel like what a lot of the people I view in crypto are unable to kind of come to terms with is like, look, like you can like we can keep doing this and perhaps we converge on something useful, but like I wouldn't say yet that this is indicative of the future of finance, right?
Yeah, I hear you. In fact, this brings me to another Gwart tweet highlight. You said, you tweeted, "It is incredibly embarrassing that Satoshi did not think about yield." And that yield that I think that you're joking about is this token printing, right? I mean, most of the yield, I mean, now you have some other sources of yield, I think it's fair to say, with RWA and stuff coming on chain, actual truly yield bearing assets, even staking. I don't really call it yield; it's dilution protection, really. But let's at least there's sort of something behind it. But most of the yield, when you talk about like especially 2021, and sort of other hype cycles in crypto, has actually been inflation, and the yield that you get is if you just sell the tokens that you either earn, you either farm or you are airdropped, right? It's not a yield; it's you're going and farming and then just dumping, right? Is that let me, well, I don't know if you have anything to add to this. I'm just pointing out that awesome tweet because of course there is no yield in Bitcoin. Why didn't Satoshi think about that? Seems like all anybody cares about in DeFi.
Yeah, I mean, I really do think this is like a vestige of like the fiat cucked mind. Like honestly, like we really have to understand it. Like we're trying to do something different here, right? Like, and even when I hear people talk about like, oh, Wall Street's gonna love yield, it's like, this is sickening. Like, you should be ashamed of yourself for wanting to pander to Wall Street, right? Like, the entire premise here is like a hard money that you can hold and hold in self custody and not risk being diluted by the federal government or people who can change the rules, right? Like, that's what we're aiming for. And so the entire premise of yield is like, it really is rooted in like a lot of this like Keynesian, like TradFi, like rent seeking mentality. And it's not to say that like yield won't exist with Bitcoin. Of course, like in efficient capital markets, like people will lend, people will borrow. Like the market will determine a true interest rate. But like the idea of just ongoing tokens, just more and more, like this idea is like it's honestly like it. When I hear this, it makes me wonder, like, what do you people think we're trying to do here, right? Like, I really, it does at times kind of, I question that, but we'll see. We'll see.
What do you think about this argument that a lot of that, the sort of the friction between developers, users, and farmers? I think I saw somebody, I can't remember, I thought it was David Hoffman tweet about this today, but I can't find the tweet. But that some of the incentives that exist today are largely, not certainly not exclusively, but were largely caused by the SEC's stance on token generation, right? That like, and the way that it sort of played out in the courts, right? Like you could theoretically have a thing where a project sells broadly to the public, with disclosures, some kind of regulated offering. We had unregulated ICOs, but in the absence of that capability, it's turned into frankly, like airdrop farming as like the only, the Ripple case. That was one of the only, that was one of the parts that Ripple won on in their case, was that airdrops weren't weren't seen by the court to be securities because there's no investment of money. So I feel, so that's sort of the way that all of these projects have gone to get their tokens out into the mainstream. Like, I don't know if you have thoughts on that as sort of like, was it
Yeah.
inevitable, or is it partially the product of the the system that as it's been designed?
Yeah, I mean, like, okay, you didn't want me to give like non-controversial takes, so I'll tell you like my honest view on this. I think this has largely been like a cop out, right? Like the reality is, okay, so I'll preface this by saying, yeah, I'm sympathetic. I think anybody should be able to release a shitcoin whenever they want. Like I really like I believe that. I don't think it's necessarily useful, or maybe what does this say about like the late stage capitalism, like hedonistic mentality that we all have because we don't have to work in the fields anymore, like. But I would say that y- to I think this has been used very much like on the side of a lot of these VCs, right? Like they take this stance. Well, we can't do it like that. Like we can't do a fair launch anymore. We can't sell directly to the public, so we have to do it like this. And like it's very rarely do people think like, wait, hang on, should we be doing this at all? Because if we do it like this, perhaps we defeat the purpose of what we were trying to do to begin with, right? And so, I mean, that would be like my first thought. The other thing too is like it sounds like so caustic to say this, but like we had ICOs, and what successful ICOs came about, right? Like we did have that period of time there where we had ICOs. Like I was reminded of this today. Aave came out of ETHLend came out of an ICO. That was one of the ICOs. There was hundreds, thousands likely of ICOs launched, right? Like what projects are we now saying like, oh, like that's how it was done? And like clearly the inception of this project as a result of being an ICO is like what made this fair. It's like, no, like these have all failed too. Like, come on, like,
Yeah, I hear you. I think there have been. I totally agree. There were plenty of bad ones. There were many lacks of disclosure as well. That and there were straight up rugs, tons of them. One thing that I've noticed is that the coins that have sort of lasted, like Tezos and Cardano and Ethereum, which had an ICO, their token distribution is significantly better and more diluted and less, held by large entities than the sort of later stage of ones that still exist that either raised as through simple agreements for future tokens or through other means, right? Like the Solanas and the AVAXs, right? Like that sort of 21, 22 crowd has a much more centralized holder base than the Cardanos and Ethereums and Tezoses, right? I mean, is that, I don't know. I guess maybe that's a lot to maybe that's not getting enough for all the collateral damage of the ICO era, but to me that's a slight positive,
Yeah, I mean, I think like distribution, like so I guess maybe to compare this to like last cycle's, low float, high FTV tokens, the easy argument to make against the points that, maybe I just made is like, look, we're still too early. Okay, like maybe. You know what I mean? Like you can always say this. Like actually I had a friend tell me the other day, like after the .com bubble, I think that Microsoft took like 14 years to return to an all-time high. So, I mean, maybe these things take time, right? But like let me just like put this in a slightly different framing. If you go and look, and I did this the other day with a very well-known VC, just for shits and gigs, right? But like if you go and look at the portfolio pages, like pick like 3 well-known large VCs, go look at their portfolio companies. I looked at one the other day and they did not have a single company in their portfolio that had launched a token that was within 25% of its all-time high. Now, okay, we're early maybe, right? But like here's my question. Like should a fund, which I'll give some context, like I have heard of ridiculously high returns for that fund. Should a fund do multiple X's, right, on their invested capital if every single one of their tokens is down only? Like to me, this is a demonstration of something distorted in a capital market, right? Like it's not lost upon me that like, VCs often have 2 or 3 winners of a 10 company portfolio, right? But that's not what's happening here, right? Like I'm talking like there are no tokens that are up versus, well, not even just versus Bitcoin, but versus their all-time highs. And like I think that this really does create like malincentives. And once again, like you can always just say, well, we're early, these will come back, like maybe, but I'm inclined to think that like the valuations of these things will never return. And a lot of this is a function also of it being open source software, right? It's easily commoditizable. Like this isn't the highly extractive, like moats that you can build in traditional like financial systems. This is quite different. And so yeah, I don't know, like just that's kind of like food for thought as to how I view tokens like in aggregate.
Yeah, well, let's talk more about that. I'll read another Gwart tweet. This is relevant and only from about a week ago. You said, I wonder if the people who are generally against meme coins but hold coins of real projects realize that there are about 0 coins that have made all-time highs against Bitcoin over multiple cycles. You said, like, you can say your plans are measured in centuries and that you're backing DeFi tokens for the long run. That's fine. But there's basically no historical precedent for these coins getting value against BTC. You would literally be making history. Are you surprised at all? Or it sounds like you wouldn't be surprised. I mean, again, some people say to me, they're surprised that Bitcoin is still, 50+% of the market cap, Bitcoin dominance, as they say. I actually think it's much higher if we adjust that metric to remove like 0 liquidity coins and whatnot. But, it's been 15 years since Satoshi released the Bitcoin software. to the public, and still we don't have. What do we have? You think that you said NFTs, and that was pretty much it, right? Other than Bitcoin and
Yeah.
stable coins.
Stable coins, right? Like NFTs, stable coins, yeah.
And
Yeah,
I mean, Bitcoin
I
stable
think
coins are
that
basically just Bitcoin that is stable. I mean, if a Bitcoin held its value, you could use that instead of a
Yeah.
dollar collateralized stable coin, right? It's just controlling for volatility. It's not particularly interesting technology, beyond what Bitcoin offers, except for that volatility.
Yeah, I mean, I got a lot of like pushback on that tweet, obviously, which is fairly common. But that like the
It's
way that
probably the point, right?
I think, well, I think like that should resonate, like that should hit hard. I think to like you should understand that over a 4 year long time period, like there have been like a handful, like literally like under five. I think somebody else pointed out stacks, which is kind of interesting. Like it's probably closer to like a Bitcoin proxy, but anyways, like there've been like sub five altcoins that have made multi-cycle all-time highs against Bitcoin. Now, of course, like the instant reaction is, well, like you can do 100x during like one of those cycles. It's like, yeah. Like this is not the point I'm making here, right? Like the point I'm making is like we have not really observed sustainability yet with these tokens. Like we may eventually, okay, and you guys keep trying, that's fine, but like we have not yet. And that should like I don't know. I think especially for retail investors, like if anything, what I would glean from that is like you should try to end the bull market with more Bitcoin than you started and you win. Like that's how you win the bull market. If you end up at the end of it after playing all these Ponzi games with more Bitcoin, all right, you probably won. So like I mean that would be like the takeaway that I would get from that.
Yep. You also tweeted, we'll step back a little because you had this other great tweet about Dune 2. I just found it. It says, what's noticeably absent in all of these movies that depict the future or worlds with advanced technologies? Blockchains. No blockchains. Do you think, again, we've talked about it, we don't have to rehash like which use cases have salience and adoption today, but are blockchains definitely good? Are they good beyond Bitcoin at all, or do they need to be? Or in 100 years, are we going to be storing large amounts of our wealth on distributed ledgers?
Yeah, I have. This is actually one of these things I kind of go back and forth on. Um, I think proof of stake blockchains. I don't see these like when you can continue to launch these over and over and over and block space becomes like and now I think there's been some like realization of this within like the roll up landscape and then like as people see like there's good quality block space you know I think over the long run a lot of this converges onto similar quality of block space and then it's sort of like where's the scarcity coming from when there's like the ability to just create infinite blockchains now like of course my bias is ringing in here with Bitcoin like when you have exogenous like drivers energy and hardware that are inputs it does make a difference in my mind in terms of like the commodity cost of this with proof of stake block space I'm like you can copy and paste this you can like create a roll up in like literally 30 seconds so then it does become like the moat of these systems becomes much more akin to like traditional financial modes. And I don't know like if this is really the vision that I even care about. Like I don't know like I'm much more interested in like an maximally open source like, free like open technology versus like trying to silo off users and like create moats around products. It's not like it's not lost upon me that like this is how the overwhelming majority of people in crypto like are trying to make money is like engaging with these teams and like applications but even like that this mentality I think is like it's very VC like it's very Silicon Valley think boy like you create these moats you create these network effects like you give out the equity and then it's like for what and like a lot of this is modeled off of exactly that like and now we're seeing in TradFi like some of the results of this like is Uber really a 0 to 1 unlock? I mean, it's the same price as a taxi now. Like Uber drivers get screwed. Like it's one of these things that it's this mentality of like building out these network effects before realizing like just how big of a breakthrough this really is. And that's probably where like a lot of my skepticism comes from. And like obviously this is even like more pervasive with like just the VC kind of like, having their tentacles on everything in crypto at this point.
This is also related. We take it back to Bitcoin. I love this. I hadn't actually thought to do this until we started talking, but pulling up some of my favorite tweets of yours. You said on January 8th, which was sort of as the foundation for the conversation. I mean, on January 8th, which was just, I think, 3 days before the ETFs, the Bitcoin ETFs were launched, you said, ETF likely approved, mission accomplished, money separated from state, unbanked or now banked. Not even sure what to do with my time now that traditional finance has been dismantled. Obviously, you're mocking the idea that this was like, some endpoint for Satoshi's creation, to be gobbled up and put inside the traditional financial system. A lot of people, in the Bitcoin world that I'm friends with, raise this concern with me. Like the same basic criticism, though. Like, is this even good? Is this good for Bitcoin? Let alone, is it bad? Is it remotely good? I have a take on this, but my audience has heard my takes on stuff. What's your take on the ETFs in general? Do they impede the vision? Does it matter? Is it detrimental or neutral or positive?
I mean, it's not exciting to me. It's like it's just another one of these things. That's like it's not what I like got me into this. Is I think it's it's net positive. Like we need like it is net positive. I also think that Bitcoin, like if we believe in this, we have to believe that it's robust to BlackRock and Wall Street, and like the dynamics of owning Bitcoin. This may be different when we get to like proof of stake chains, and like that'll be interesting to observe, right? Like, and especially if there are staked ETFs. But like owning Bitcoin doesn't give you more power over the network. In fact, like Michael Saylor owns a ton of Bitcoin, and like his actual like tangible impact on the code base of Bitcoin is, at least right now, like converges on nothing, right? Like, and I think this is the idea. So, or this is what we should hope for, right? And so I mean, it's not like it's good. It makes the price go up. That's good. That makes that makes people want to buy it and hold it, and it increases like the stability of it, right? Like I think, I don't know, I know you're more into like the market research side of this stuff. Like I think there's a good chance like we don't have these 4-year cycles anymore. Like they're not going to be like they were before. You got like whatever Saudi oil money buying. Like I think, I don't think we're going to see like crazy drawdowns anymore. That's good. Like it validates the long-term store of value and increasing stability. Maybe we won't see it go up 10x, right? But like this is net positive. Now, I still would, I would say if Wall Street starts making, starts merging into core, like, yeah, this, that would not be what I came here for.
Yeah, I hear you. No, I mean, I by the way, on your point about the cycles, I think I mostly agree. I don't certainly don't want to say I know, but you have the ETF buyers are largely and are going to be, if we look at the broader ETF market, they're largely end clients of financial advisors, right? And it's financial advisors, RAAs, that are putting them into ETFs. And they don't, I mean, maybe they rebalance, they have a target and a thesis and they rebalance periodically. That also serves to reduce volatility, because if you have, say, I want to have a 1% allocation in my portfolio to Bitcoin. Well, when Bitcoin goes up a lot, you actually sell to bring it back down to 1%. But when it goes down a lot, you buy to bring it back up to 1%. So I think broadly volatility would come down as it's more widely held institutionally. And that does make it better. I mean, I think the properties of Bitcoin are very, very much, fundamentally speaking, like a digital gold. They should be seen, and it should be seen and used as a long-term store of value because it offers a lot for that. But the volatility is just the main thing that stands in the way of that being, how it's widely thought about. So I do think it's positive. I also like your point on proof of stake networks. Capital controls consensus. This is one of the things that's the conundrum I see with the Ethereum ETFs. On the one hand, if they don't stake, which it doesn't appear they'll be able to in the US, well, then you're kind of paying like a 370 bips or 400 bips a year fee in dilution to hold that ETF. And whereas instead of if you had bought ETH and staked it yourself on the network. So that's bad. But on the other hand, if the ETFs could stake, then probably be just a matter of time before the ETFs themselves were like controlling all block production on Ethereum, or the vast majority. So it's a little bit of a catch-22 with proof of stake. and ETFs, which, I guess that's good, right? There's a trade-off either way. But you don't have that trade-off with Bitcoin in the ETFs.
Yeah, I mean, like you said, Bitcoin definitely resembles digital gold more in this capacity, right? And like, I think miners being separate from like the network, this is a good thing, I mean, what I'm getting at with regards to like proof of stake, right? Like I have
Yeah.
always kind of rejected this notion that like users and validators should be the same entity. Like I don't really think this yeah, like it may be a much more like succinct way to say it is like miner sell pressure is good. Like this is exactly what we want, right? Like we want miners dumping coins. It's when they start to hoard coins, like that actually is like more concerning. Most of them have failed like miserably in doing that, right? Like they end up like way over leveraging, borrowing against their coins, and they get nuked, and like they have all these miners out like on loan. But yeah, like I think this is like a good model, right? But it'll be interesting to see with Ethereum as well, with the ETF.
I want to ask you, just because you have looked at and trolled a variety of projects and concepts, from DAOs to tokens, and do you need a blockchain? You had a great, I love the do you need a blockchain? This is something I wrote a paper at Fidelity in 2017, early 2017, called "Do You Need a Blockchain?" and looking at that core question, like at what point do you actually need a token? And there was a great academic paper, I forget what it was actually called, but they had a website, do you need a blockchain.com, that took you through their their decision tree of like when it did and didn't make sense to have a blockchain. You tweeted in November of last year, okay, but why does it need to be on a blockchain? You said, oh, I'm sorry, do you know of a better place to monetize ideas that are this terrible? What are some of the most terrible ideas in crypto that you've seen?
I mean, like Luna, like Terra Luna obviously comes to mind as being so patently horrendous. Uh, I'm not sold on trading on blockchains, which is like a lot of what people do on blockchains. I think, I interview a lot of people on my podcast about this. Like and it's interesting because I have a lot of people that work on AMMs, like automated market makers, or, order books or whatever. They may have like some preference. And like, I, every time I'll still ask them, like, what's the future of trading on blockchains? Right. Like I want to hear their opinion. It's like, it's one of these things where I think it's much easier. Maybe I should rephrase this. I think we have a much better chance at decentralizing money, commodity money specifically, where the inputs are naturally geographically distributed, right? Ideally, we'll see if we can get like the hardware out of one company's hands, but for the most part, like energy being like naturally geographically distributed around the world, like I think we have a decent shot at this, right? With money. Finance isn't exactly like money. Finance actually benefits greatly from consolidation of capital, centralization, and then you kind of have to kind of coming back to your question, like, do we need a blockchain? You kind of have to look at this as does the benefits of something being on this distributed ledger that nodes all around the world have to update and agree upon every X amount of seconds, does this outweigh the cost of having all these distributed nodes around the world and latency concerns and the boxes required to run these? And um, yeah, like I'm not sure, and I think that this is probably one of my overarching views, like I sort of hinted at the beginning, right? It's like when I say I'm not sure, I'm not saying this like I know best. I'm not sure yet. I think there will be some long-term viable applications of blockchains. But am I saying that because there have been billions upon billions of dollars invested at this point, such like to the point where it's like, guys, we got to figure out something? I don't know, maybe, right? I think stable coins are obvious. Do we need global consensus for stable coins? Maybe. If you're like in a country with like very strict capital controls, I think you're going to want, like a distributed global consensus. If you're in, even slightly lesser authoritarian countries, you can probably do fine with not needing a blockchain. And when I say not needing a blockchain, like there are a lot of benefits to not using a blockchain, right? Like there are a lot of benefits. Whereas, I think, and so maybe this comes back to like my point with regards to trading. Like, it's just like you're always going to run into sophisticated actors in anywhere in finance. And there's really not been any example in history of where like finance being decentralized for the sake of being decentralized is really like had like a net positive impact, I don't think. So I don't know. Maybe this is like bit contentious, but I am willing to like feel it out, you know?
No, I think I think it's very fair. The criticism you have, I will point out to reiterate the point you were making before. Some people, when they say, is it good? I'm not so sure. They are implying that it's not good. I think you're pretty upfront about being skeptical, but also not knowing on a lot of these. And I think, gosh, we need more of that. I think that maybe that very self-aware sort of nature that you have, Gwart, is behind a lot of your criticism, because on Twitter, the criticism that you levy through your humorous and satirical trolling tweets, because so many people are out here saying they do know, like with ultimate certainty, like XYZ is going to be valuable. Is there, are the crypto, are there, I don't know, is there a higher concentration of narcissist geniuses in crypto, or do they just think they are? It's like,
No, I think that, you know what I realized, like this is like some like heavy hitting right here. Like what I realized eventually is like I don't hold like I don't have like animosity, or even like I don't think that these people are like scammers, right? Like that's not, if I see something that I'm like, I don't really think this is going to work in the long run in my opinion, but my inclination isn't like, oh, this person's like out to grift. A lot increasingly so in the past, like the last cycle, and as we mature, there's a lot of brilliant people, like truly. I know a lot of these guys. They are absolutely brilliant people working in this space. And what I realized is like a lot of these, this kind of goes back to like the distortion of incentives in my view. Like a lot of these kids, if you will, you get some kid out of Stanford who's like 23 years old and he finds a problem in crypto to solve. Like, so maybe like there's a lot of arbitrage going on like some automated market maker. And they're like, oh, I got a solution for this. And they do have a solution. Like they're gigabrains. They do have a solution. And they actually do build it out. Well, here's the thing. Like when these kids say, oh, I have a solution for this, and a VC comes along and says, hey, we'll give you $20 million to build that solution, you start to realize like it doesn't really matter if these people are thinking about like whether or not this stuff's going to change the world. They're just kind of like maximizing their own utility. And like I don't hold like animosity towards really any like people. This stuff doesn't like deeply offend me. You know what I mean? Like I'm not out like, oh, scammer. It's just I do think that there's a lot of like brilliant people who may miss the forest for the trees, right? And like it's like, okay, so what are we trying to do here, and like what are we trying to do to achieve it? And like that chasm, oftentimes like you get so deep in the mechanism design space, you get so deep in like the game theory and stuff, and you come out the other side, you're like, okay, wait, what have we just spent all this time and money on, right? And that's probably like the root of a lot of my like, skepticism or trolling or whatever. And then I will add one other point, which is like slightly more contentious. Like I think if you, and I'm not picking, like, don't assume that I'm picking on anybody in particular right now. I'm like leaving this very vague, but like, if there's a founder who makes a ton of money, I think in capitalism, like in efficient markets, you should have to have provided a ton of value. Like, so if you get extremely rich, you better have done something extremely valuable. And so I think what happens with tokens is that like with this early liquidity incentives, right? Maybe this stuff does ultimately. And like that's what I'm saying. Like I'm willing to say maybe, but maybe in 10 years, this stuff is extremely valuable. And it really does like help build the, like this is the public goods of the future. Maybe that's the case. But my view is like, I don't know that you should be really rich yet. You should be really rich once this has provided a tremendous amount of value. And if you look at the overwhelming majority of crypto applications, they have 2,000 daily active users, 3,000 daily active users. Their chart of TVL is, starts at the top left and goes down to the bottom right. It's like we need to be we need to be honest about this, right? Like we need to be like I do find that probably is what gets under my skin the most. I would say, to the extent that anything gets under my skin, that does bother me. Like I don't think you should get extremely rich unless you've done something extremely valuable for mankind. And like crypto distorts this, like it screws it all up.
Yeah. Yeah, I hear you. The time to liquidity, as they say, or the time to exit for the investors is so heightened when you have tokens that it can create those distortions. All right, Gwart, before we wrap, you did just launch this great podcast. You've had Tarun Chitra. You had, I think the first episode, you had Eric Wall. You recently had my former employee, Walt Smith, on your, which I listened to some of. He surprisingly didn't really mention his Galaxy research background, although he did also work in prop trading and venture at Galaxy. I'm just ribbing on Walt. And you have this with Block Space Media. I think it's really great. You have a lot of very smart people come on and talk, as you mentioned, some of the smart people that you talk to. What is next for Gwart? What's the next thing? I mean, you've got this widely followed and very entertaining and incisive Twitter presence. You've got a very high, I would say, highbrow intellectual blockchain technology podcast. Do you have further plans for Gwart?
No, I think the podcast was something fun that I always thought like, oh, okay, I'll be really good at this, right? Like everybody thinks this, like, oh, I'll crush a podcast. And so, but then I talked to Will, like the producer, and he was like, oh, dude, you'd crush a podcast. And I was like, I know, I've always thought that, right? And so it's just been like a fun pet project thus far. And really like it's conversations that I would just enjoy having anyways. And I think that, yeah, like a lot of the more crypto sort of centric podcasts, like I find, there's a lot of good ones. Like honestly, there's a lot of good ones that also like reduce fairly complicated ideas down to like pretty, comprehensible. Like for like your average person, it's not like really my goal. My goal is just like to kind of be absurd with people who I think are like quite sharp in this space. And then like I don't really have any other plans. Like I'm not starting a VC. Mainly what you'd expect the person to act like behind the account on Twitter is pretty much what I act like.
Well, I've enjoyed it. I hope there is like a Gwart TV show where we find out that you're like an expert in Call of Duty and we get you giving these takes while you stream on Twitch or something. Because I have enjoyed the rise of internet Gwart. So I was saying Gwart, well-known internet troll and critic and observer of blockchain tech. Gwart, thank you so much for coming on Galaxy Brains.
Yeah, thanks for having me.
That's it for this week's episode of Galaxy Brains. Thanks to our guest, Gwart, from the internet, crypto, Twitter, troll, and analyst and satirist Gwart. Love that interview. And our good friend, Bimnet Abibi from Galaxy Trading, as always. Everybody have a safe and happy weekend, and we will catch you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.